Now, we proceed to our first panel, which tackles a comparison of modern wealth structures. Leading the panel is Ms. Katie Kwok, who heads RHT Law's Private Wealth Industry Group. And joining Kaylee are our very own lawyers, Mr. Saravanan Radhakrishnan and Ms. Nandu, our newly minted partner. And then we have Ms. Cindy Ang, Director for Private Wealth at Vistra Singapore. Now, let us move to the RHT studios, where our panel discussions will take place.
A very good morning to everyone. Today, I'm delighted to be joined by three distinguished guests, Mr. Saravanan, Ms. Nandu, and Ms. Cindy Ng. Now, panel speakers, are you all feeling comfortable? Ready to rock and roll?
Yes.
Studio not too close, not too cold for you guys?
No.
Great. So because we've got lots of hot stuff to cover today, to quote from Jane Austen, it is a truth universally acknowledged that a single man in possession of a good fortune must be in want of a wife. In modern times, you may or may not need a wife or husband, but I would say that you definitely need a good private wealth structure. My panel speakers will be talking about different types of private wealth structures, the good, the bad, and the ugly. And also they'll be talking about trust disputes and, if possible, how to avoid them at all costs. So without further ado, I will now invite Sarah to speak on VCCs and family offices. Now, Sarah, you have an active practice in corporate transactions relating to private and public investment funds, M&As. Yes. You also advise on tokenizations of assets and shares.
Yep.
Sorry, this is not cross-examination. So, you are actively involved in the startup space. Yes, I understand. Outside your busy schedule as an RHT lawyer, we know we are very busy. You've also written articles for journals and publications. I know that you are very active on social media. I've checked up on your LinkedIn account and so on and so forth. And so how do you feel about Elon Musk taking over Twitter?
Well, okay, that's a very complex question, I guess. I think there are two sides, the pros and cons to it. The pros is Elon Musk is a consummate entrepreneur.
Yes.
He's going to bring in a lot of innovation. He's going to bring in a lot of business monetization models to the company. And I think that's something that Twitter needs, because at the moment, the monetization model is very based on data. The cons of it would be, or the regulatory issues that you look at is, Twitter controls and generates a lot of user-based data.
Right.
So they have a lot of information to control. So having that much of information access is something that I believe that certain regulators will take a look at as well. But overall, I think it's a net positive for Twitter and as well as tech companies in general.
Right.
Yep.
Well said. I cannot agree more. So anyway, Sarah, please proceed.
Right. Very good morning to everyone. I'll be talking about VCCs and SFOs. Now, Singapore has had a very healthy and robust growth in the wealth management sector over the past couple of years. In fact, adjusting for the COVID era, I would say that it's about double-digit growth in terms of asset management over the past 4 to 5 years. And this is, of course, assisted by, you've got the coming in and the development of the family office space in Singapore, together with the introduction of the VCCs in 2018. Now, what this has done is it has made Singapore a very attractive and very, I would say, technically in-depth jurisdiction for fund managers all around the world. It provides a good alternative to traditional fund structures like Cayman and the BVIs. So VCCs provide an alternative to our fund managers. It provides a good new structure that coexists with existing structures that fund managers are very much used to. On top of that, the SFO industry, or the family offices, multi-offices, external asset managers, the entire genre of wealth structures, these are also growing well in Singapore. And this is, of course, assisted by, you've got a very good push in terms of policy to grow these sectors, as well as a healthy pipeline of fund flows coming into Singapore, setting up base in Singapore, and making sure that Singapore grows as a proper wealth management hub. Yeah.
Thank you very much, Sarah. Okay, so I think we will now move on to Nandu, who will be talking to us on trust assets. Now, Nandu, you are currently a partner at RHT, newly minted.
Yes.
Welcome on board. And your areas of practice involve disputes relating to trust,
Yes.
fiduciary duties, financing contracts, cross-border investments, shareholders and partnership disputes. And you also handle international commercial arbitrations. Right?
Yes.
Very good. You were recently recognized and featured as one of Singapore's 18 most influential lawyers under 40 in 2021 by the Singapore Business Review. And I understand that you volunteer your time with various grassroots organizations. Maybe you want to just let us know who are these organizations?
I'm part of the residents network,
Mhm.
which is basically organizing events for the neighborhood, and also I do conduct talks about LPAs for the residents. That is something that I do, and I'm also actively involved with youths in my neighborhood as well. So we are part of a youth network. It's all under the People's Association.
I see.
Yes.
Excellent. And I am pleased to know that you share the same hobby as me, which is reading. And so who is your favorite author?
Sandra Brown.
Sandra Brown. Why
Yes.
Sandra Brown?
She writes on a variety of genre, and my most particular favorite is the suspense novels.
Mhm.
I really enjoy suspense stories.
Right,
Yes.
right. Yes. Well, well, for myself, I enjoy detective novels, and of course, my favorite is also Miss Jane Austen, as you all know. Now, before I get too carried away, Nandu, please proceed.
In terms of trust disputes, what we have seen is basically, the basics of trust is that you have the three certainties, which is you're able to ascertain the intention of the person who is setting up the trust, and secondly, whether the trust properties are identifiable, and thirdly, whether you're able to ascertain the beneficiaries, the identity of the beneficiaries to certain precision. So these form the fundamental of trust, and I think that continues to hold even when you're looking at digital assets. Singapore, as well as other jurisdictions, the popular ones where trusts are based, such as Jersey, your BVI companies. So these are all jurisdictions who have recognized digital assets as being capable of being formed as part of a trust. So it is a good development, and as part of the disputes, we have also seen breach of fiduciary duties by trustees or protectors, and I think it's an exciting time for us to be working in. And of course, my presentation would be to say, how you can avoid getting into disputes. How can you structure your trust, as well as how to draft your trust deeds, so that you don't get into issues with jurisdictions and whatnot.
Okay, well, that's a very good overview. Thank you very much. And last but not least, ladies and gentlemen, we are actually, I think we are going a bit fast, but because we want to have more time for Q&A, please do send in your questions if you have any, so that we can have more time for the Q&A. So anyway, last but not least, we have Cindy, who will be speaking on trust structures. Cindy, you are Director of Private Wealth at Vistra Singapore. Your focus is on business development, helping the ultra high net worth individuals in Asia with wealth management, asset protection, and succession planning. Now, you have given me the number of years of your experience, but I will not expose your age, so I'll say you have over many years of experience in audit, trust administration, trust relationship management, and wealth planning. And well, in terms of personal hobbies, you mentioned to me that you enjoy singing and doing art and craft work, and also you enjoy great food. So, who is your favorite singer? I mean, what are the favorite songs?
Sure. It would definitely be, our Singapore pride, which is JJ Lin. I think he has done Singapore very proud in, presenting in variety shows. Basically, he has done Singapore really proud.
Right.
And I do like his songs a lot.
You prefer his English songs or his Chinese songs?
I think both, because they are very different genres. But I would tend to like his Chinese song better.
Right. Okay. Well, I like his songs too, but I mean, just to mention that I mean, we will be announcing this very shortly, but just give you maybe some just heads up to that. We will be having a charity concert very shortly in July with and so maybe we watch this please watch this space. We will be announcing very soon. Not with Mr. Lin, with another local singer. Yeah. Okay. Now, Cindy, please proceed.
So let me just give a brief introduction of Vistra. All right. So Vistra, being a global service providers, we have global footprints around the world, over 45 jurisdictions, 75 offices, and currently today, I think our assets under administration stands at 395 billion. So, being a global service provider, we have seen structures, and we've done many structures for ultra high net worth clients. All right. And I think the audience would be interested to know what kind of structures that we would actually be, we have actually set up for clients. All right. And how do we actually structure, the kind of structures that, of recent times the clients would be looking at. I think these would be of interest to the audience today.
Okay, good. Now we are into the very interesting segment of Q&A. Please do send in your questions if you have any. But I already have some questions here with me, and I want to start with Sarah. Now, Sarah, sorry, this question is a bit long, but do bear with me.
Sure.
You see, now we all know that EDB has a dedicated web page on Family Office.
Okay.
And they have a very useful overview of the incorporation journey. So it's from objectives, business plan, setup, and operations. So based on experience, what other practical matters or issues should a client consider if he wants to set up a family office in Singapore? Okay, so maybe I'll give you an example. In order to set up an SFO, single family office, ladies and gentlemen, the client has to navigate through a pretty fragmented legal framework of different statutes and regulations. I mean, you've got to look at Companies Act, got to look at Income Tax Act, Employment Act, and you're dealing with properties, landed properties, you look at Residential Property Act and all that. So do you think the advantages in having a so-called omnibus family officers act in future? Something to do with that.
Right. Thank you, Kaylee, for the question. It's pretty interesting. Well, having an omnibus legislation would sort of go against what MAS has been doing so far when it comes to family offices, which is not to tie family office down to a particular definition. It is right now. It's based on substance over form. They look at what the structure of it, the relationships between the people, who are the people that's involved, whether they're part of a particular family, whether is there any external managers. So they focus on a more basically substance over form. Having an omnibus regulation, what would happen is there's a risk of defining SFO in a particular way in order to make sure that the different regulations of the omnibus law applies to the particular SFO. Now, at the moment, the current process is fairly, I would say, fairly simplified in that when it comes to the structuring of the family office, you have two particular laws to look into. One will be the Securities and Futures Act, where you need to get exemptions, as well as the FAA, which is the Financial Advice Act as well. Once you get those particular exemptions, it's pretty much of a more or less of a smooth ride as well. In terms of residential properties and Income Tax Act, now these are, I would say, regulations that come after the structuring, and it's also depending on the investments that SFO is going to make. For instance, If your SFO is not going to, if the SFO is managing the fund,
Mm.
it's not going to make investments into residential property, you are never going to look into that particular legislation.
Mhm.
So it's very investment specific, depends on investment mandate.
Mhm.
So for now, I think the current model works. It captures what MAS is trying to do. It provides flexibility for fund managers,
Mhm.
and it also provides the ability for fund managers, or families,
Mhm.
to structure it according to the different in fund vehicles that they generally use.
Mhm.
So I think that is the greatest advantage we have,
Mhm.
not to tie down the objectives, not to tie down the strategies
Mhm.
that families can use to a particular one size fits all model.
Right.
The best way possible is when it comes to ultra high net worth companies, they do value privacy, transparency, and also they want flexibility to be able to achieve their goals without too much red tape.
Right. Thank you, Sarah. Now, I would like to request to flash a structure, because the structure of the triangular structure, Alex, do you have that? Because there is a question, there's a very interesting question which I want to put to Sarah and Cindy. Maybe you could share with us your views on that. Structure, please. Okay, very good. Now, there is a question. So there's a question. Hi Kaylee, for SFO, if without a whole co on top, then and you only have the asset co and the asset management co owned by the same individual, that means instead of having a whole co, you have an individual in place of the whole co. Would this fall under the license exemption? And do we still need to consult MAS? Then the question is that, the issue is because the legislation, I believe, has a certain wording, specific wording regarding related companies and all that. So maybe Sari, you can start first and then Cindy can add on.
Okay, so when you make an application to the MAS, right,
Mm.
there are certain prescribed models that they expect. There's nothing wrong with that.
Mhm.
But there is a caveat, and there's an exemption-based scheme where you make an application, you describe the shareholding structure.
Mhm.
It may be different. It may not have a common a whole company, but it may be a person. But that person, for example, the person belongs to the same family member that operates another of the company. And once you have the structure down, the relationships down, and based on certain other criteria you have, you can apply to MAS based on this. They will analyze the conditions and then provide an exemption on a case-by-case basis. So it's not an automatic rejection just because you don't fall under the model structures of sorts, but you still can apply for an exemption on a case-by-case basis.
So, Cindy, what do you think? Do you agree with Sarah's views on that, case by case, or do you think the structure is that is the gold standard, and probably case by case but they might be asking more questions on why you don't have that structure and why do you want to have the individual on top?
I would agree with Sarah as well. So
Mm.
it should be by case, exemptions from the MES, all
Mm.
right? And then from practical experience, from a trustee's point of view,
Mm.
we do see two kinds of different structures. So
Mm.
of course, by a legal opinion method, where you
Mm.
get the SFO exemption, and also of course by case exemption, where the Singapore Family Office, or either you call it the fund management company, sits outside of the trust structure.
Mm.
So we do see, different kinds of structures that, clients set up these days.
Right.
And these are quite common.
So, but can I say that in order to get your license faster, approval faster, you follow a certain set standard, follow a certain format, rather than have something creative and then you end up having to go through the case by case considerations and all that. That would be the
so from
suggestion.
experience, definitely the legal opinion method would be faster,
Right.
to get your approval from MES.
I see. Okay. Well, heard from the experts, ladies and gentlemen. Now, okay, I will go to Cindy since okay now. Cindy, the question is that trusts are often used by individuals for tax planning and protection against creditors. So with the increasing government controls and tighter regulations, it is now mandatory to disclose identities of registrable controllers and ultimate beneficial owners, UBOs, not UFO, UBOs. So would it be fair to say that the protective shield provided by trust is not so effective anymore in the new legal environment?
Thank you, Katie, for the question. I think this is a very good question that's being posed because, we see the current landscape these days, all right, the new regulatory environment whereby UBOs has to be disclosed. We have CRS reporting, we have FATCA reporting. So we have seen the change, and I think clients are beginning to accept the change as well. They are beginning to, in the past, they used to set up structures for confidentiality purpose, but because as the regulatory environment changes, they are beginning more and more to accept this kind of changes. And as what the reasons behind setting up structure these days are purely of asset protection, succession planning, and I would say to a certain extent, some kind of extent of tax planning element over there.
Right.
Yeah.
Okay, excellent. Now, Nandu, I think Cindy and I, we had this conversation with you previously. So, and you mentioned that, okay, cryptocurrencies and all that, not all jurisdictions recognize the status of cryptocurrencies, and some of them even have a prohibition and restriction on cryptocurrencies. So, given that different jurisdictions have different enforcement regimes for trust assets, are there still advantages in having a global trust deed? When we do trust deed, we actually do a global one. Hopefully that we can hoping to cover assets from in various parts of the world. Or is it now better, based on experience, to have a different standalone trust deed in each individual jurisdiction?
Okay. I think we have to go back to what kind of assets is the trust holding on to, and also what kind of investments are they making, right? So that's the basic. So once you have once you're clear about what you're trying to protect, and then when you get a corporate trustee like Misra to act for you, they have certain jurisdictions in which they have the trust. So you have something called a forum for administration clause, where they will state that this trust deed, the forum for administration is going to be the laws of Singapore, for example. In which case, for the proper administration of the trust, they use Singapore law. If let's say they need to change strategy, for example, they are switching over to a different investment strategy, which requires them to use another jurisdiction. Your trust deeds will usually have a clause which gives the trustees the discretion to actually change the forum for administration, the proper law for the forum for administration. So it is possible. So you can have a global trust deed which gives discretion to the trustee to make necessary changes, and such clauses where where they are allowed to change the proper law, they are also allowed to make additions or amendments to the powers under the trust deed, such that under the new jurisdiction where they're going to operate under, it is still enforced in the same way, and the powers are given the same weight as they did in the original jurisdiction. So that is, you're allowed to do that. But if let's say you are looking at assets where you have in a particular jurisdiction and you have an individual trustee who is overseeing the trust, in those cases, it makes sense to have an individual trustee in that particular jurisdiction. Or if your beneficiary is in a particular place and it's going to be a very simple structure, yes, in that sense it makes sense. But if you have assets in various jurisdictions, and if you're appointing a corporate trustee, then from a more efficient and practical standpoint, I would think that a global trustee does its job, and your trustees and your legal advisors will be able to tell you how to draft it in a way where you're not caught out by any changes in law which stops the trust from taking effect.
I see. I don't know, Cindy, what do you think? For Vistra, you all will have your standard global trust deed. Have you ever come across a situation where your global trust deed for some reason cannot work in other jurisdictions? Because your governing law will usually be Singapore law.
That's right.
Unless done by your other overseas officers, then it will be BVI and all that. So do you have instances where you need to change your forum of administration on it?
So far, the common law used over at Singapore or other Asia Pacific region is usually Singapore law. So the forum of administration is usually Singapore administration as well. Yeah, unless your structure is a bit complicated. If you are doing a PTC structure, you may mix it with maybe a Jersey Purpose Trust, and that's where your forum administration of the Purpose Trust will needs to be in Jersey.
Right, but what if you have assets all over the world? I mean, you have houses in Australia, shares in New York Stock Exchange and all that kind of thing, and you want to have everything covered under the Vistra Trust deed, Global Trust deed. Is that possible, or you will advise that depending on where your assets are located?
That is certainly possible. So that's one reason why trusts are being used for consolidation purpose among global assets. But of course, subjecting to the law of the foreign ownership restrictions.
Yes.
So for example, if you're talking about immovable properties,
Yes.
then it will apply to the law of the local law of CITES over at that particular jurisdiction.
Right, I see. I know that for landed residential property in Singapore, you need to be a Singapore citizen, or if you're a PR, you need to get the LD, the approval from the authorities. For trust companies, the trusted companies, normally you don't hold landed residential properties. Am I correct?
From Singapore's perspective, no. We have never hold or either not encouraged to hold Singapore properties. That's right, because of the ABSD, the stamp duties, which is taxed at the highest tier. We normally don't encourage clients to put in Singapore properties in particular into trust structures.
Okay, right. Okay, thank you very much. Now, we have a few more questions, so I'm just going to this question is from the audience. What is the minimum capital requirements for an investor to get into wealth management with perspective for retail clients and low cost? Minimum capital requirements, Cindy, I mean the investor.
I would think this question is more
For the private bankers?
Private bankers, as well as usually there will be a minimum capital for private banks. These days the minimum starts from 5. So it really depends on which bank is willing to support. Some banks I do see they still are able to start with 1 to 2. All right. In my view, I think everyone needs a good wealth planning structure. All right, be it whether you're a retail client or whether you're a high net worth client. So of course, if you're a high net worth, you are able to afford more costs.
Yes.
Then definitely you will be looking at more sophisticated structures like family offices, like trusts. But if if you're normal clients like myself, then probably a will should be sufficient. A will and an LPA at a basic minimum that you should do some wealth structuring and planning.
Okay. Now, actually, when it comes to minimum capital requirements, maybe let's talk a bit about 13O and 13X, the latest developments. Maybe one of you maybe want to update the audience. What are the latest changes?
Right.
Sarah?
Okay, so 13O was previously 13R, which is the resident Singapore fund. The changes are, it used to be having no minimum capital AUM, capital requirements. Now it's 10 million with the ability to raise up to 20 million within the next 2 years to show that you're raising funds and you're raising capital in Singapore. You have a grace period to raise it within the $20 million within the 2-year period. So you have to satisfy that to qualify for the particular tax exemption. You also need to hire investment professionals. Now, previously there was no requirements. All you need was a fund manager for that. But now you need investment professionals. You need to hire 2 of them with a minimum salary of $3,500. There's also a new requirement to invest in local Singapore investments. So it's going to be 10% of the AUM or $1 million, whichever is lower, $10 million, whichever is lower. And that particular AUM, that 10%, it's to invest in local investments, Singapore operated companies, unlisted companies in Singapore, as well as listed companies as well. So that's actually to show, that's actually to put investments generated and managed in Singapore, funds managed in Singapore, to be invested in local in local companies and local ecosystem as well.
Right. The this, I think this question probably asked by, not by lawyers, but probably by the clients. Why do you think, maybe based on your experience, why do you think that there's a recent change in all these requirements? I mean, Cindy, based on experience.
I would think that MAS is trying to target on, the quality kind of investors coming into Singapore. So definitely this is a reason why they're looking into 10 and above minimum AUM requirement rather than, the lower tier.
But so what happened to the lower tier clients now? I mean, they cannot be single family offices for the exemptions. So what would you advise them to do now? Yes.
I think as a stopgap measure, SFOs that are unable to hit the particular threshold for the moment,
yes,
can go via two methods. Via the multi-family office option.
Yes.
That's for you to share the cost with other families.
Yes.
Or you can have the external asset management model as well. So these are the two ways where you can park your monies there, run up the assets, run up the capital for a short time, and once you hit the threshold, you can move out to become a single family office. So that's the current stopgap measure that potential SFOs that cannot hit the threshold can actually utilize.
Okay, so you go with MFOs, and VCCs.
Right. So when it comes to VCCs, at the moment, and I say at the moment, it's not possible for SFOs to use VCCs because it is a requirement for a licensed or regulated fund manager to manage the VCCs. But this is a current regime. There are, of course, industry talks. There are, of course, updates and news and conversations going along where there might be an update to the regime, VCC 2.0. That's the colloquial term in the industry, VCC 2.0, where the requirement for a fund manager may be removed for the VCCs if an SFO is applying or using the VCC. So that has not come to pass. So at the moment, once MAS comes up with this, then that's an option that family officers can utilize.
Okay.
Yep.
Right. Thank you so much. Now, Alex, can we have the triangle structure again? Because I think apparently our audience is very intrigued by the triangle structure, and also by your previous both of you, by your previous comments. Okay. I think, Alex, maybe we just keep the structure there. Okay. So for the triangle structure, this is a question from audience. For the triangle structure, by issuing legal opinion, we don't need to go through MAS, but with two-company structure, then consultation with MAS may be needed. Is that your view? Cindy? Is that your view?
So it's quite cute. The audience question was triangle structure. The triangle structure is actually a trust structure, all right? So definitely family office, it can be held by individuals, or either if the client is looking for succession planning, they can certainly put it under a trust. Okay, so your question is, by issuing the legal opinion, we don't need to go through MAS. That's not true, because generally there are three sections for this kind of tax incentive. You have the section 13O, 13U, as well as 13D, right? So for 13O and U, there is a requirement that you need MAS approval in order to get the tax exemption. The only section that you don't need the MAS approval is section 13D, which is the former section 13CA.
Right. So with, I think the question is, but with two company structure, I think the question is, just now we were talking about the individual sitting on top. With two company structure, I think the second question should be correct, right? With two company structure, then you need to consult MAS, right? Because I think you guys were saying it's on a case by case basis, right? Exemption. Sarah?
Yeah, I mean, I guess because in this case, the two company structure without the common holdco, yes, you need MAS. But when MAS will always be involved when it comes to applying under 13O.
Mm.
So it's not exactly depending on whether your particular structure doesn't hit the mark. It's actually the type of exemption that you're going for. If you're going under 13O,
Yes.
you have to apply to MAS
Yes.
for an approval
Yes.
before you can shoot it off to IRAS for the tax exemption.
Correct.
So either way, MAS will get involved.
You will get involved.
Yeah.
So legal opinion, MAS is involved.
Yes.
Individual and not whole court sitting on top, MAS also get involved. Okay, so whoever is asking this question in the audience, please write to us if you're still not clear, and then we'll try to answer your question in greater detail. Because we know that this is actually quite an unusual structure actually without the whole code. Now, I have a question on crypto assets. And I think this one, Nandu, maybe you can try and answer the question. With crypto assets increasing in value, and I think more and more people buying crypto assets, NFTs and all that, how are you advising private keys, passwords for digital wallets to be held so that they are not lost if the principal passes away? It's a risk issue.
Okay, rather not from really a dispute point of view, but because usually when you have crypto assets and your digital assets being part of the trust, you have to your trustee has to be holding on to the key and to also to all the passwords that they have to access in relation to, for example, you have a YouTube account or a YouTube channel,
Right.
And you want that to be also part of your trust,
Right.
and you have to give those passwords. And for example, if you're holding on to NFTs,
Right.
the tokens that you're using, the passwords and the keys where which gives you access,
Right.
that has to be given to the trustees to hold, because that's how they will manage it afterwards when the principal passes
that's
away.
assuming if you have a trust, but you are just an individual, you don't have a trust,
Okay.
you don't have a will. So what do you do? I mean, from the when you do a probate and all that, right? How would your executors in the first place, how would they know that you even have all these crypto assets? But assuming that they know, they look through your files and all that, they know. How would they get access to your passwords and all that?
Okay, this is going to be slightly more difficult because one is to ascertain what kind of assets they have.
Yes.
If you have no idea, then it's a bit difficult to also for us to, when we proceed with probate, right?
Yes.
You have to at the end of the day give a schedule of the assets
Yes.
that the deceased has.
Yes.
And if you are not certain, you've left out certain assets, then for example, like cryptocurrencies where you're holding it in a digital wallet,
Yes.
if no one knows that you have a digital wallet, then it's pretty hard for you to get. But if you know that someone, the deceased has a crypto asset, and you're able to ascertain which exchange they have it under, one way would be for us to write to the assets, the exchange, and then request. Of course, we need a court order for them to disclose
Sure. the grant of probate.
Correct. And the way to do it would be for them to then transfer the asset in that particular digital wallet held by the deceased over to the executor, who
Yes.
will be distributing the asset to the beneficiaries.
Okay. I think that's if you know what are the assets, and you know where to how to reach the exchange. I mean, some of them don't even have a physical office.
Yes.
So I think but how would you advise the clients to protect their crypto assets? By I don't know, by informing someone close to them that, hey, I've got all this, and in the event that I pass away suddenly, please go to this drawer and take out my file.
Okay, as a lawyer, what I would tell you is to
Yes.
have your will in place,
Yes.
so that it makes it easier for your family after you've passed away to ascertain what are your assets,
Yes.
and to also ensure that your assets are being distributed in the way that you want
Right.
them to be distributed. I think that is very important. The main reason why you should have your wills drafted, and as part of your when you're drafting the wills,
Yes.
when you approach the lawyers, if you have crypto assets or you have any sort of digital assets
Yes.
that you wish to pass down, and your lawyers will advise you as to how you should structure in a way where your passwords or your digital keys can be disclosed subsequently to the executor to then have access to the funds or the digital currencies to then distribute them subsequently. This is very important to have a proper bill that's drafted to protect you.
Okay, great. Before we go back to the triangle structure, I think that this is very interesting. But I want to just ask a very quick question, Cindy. You are a trustee. Have you ever held passwords or to digital wallets for your clients and all that? I mean, because we have to change our password all the time. So how do you ensure that you are holding on to the correct password? I mean, Nandu said that actually by right they should give you the password so that you can access it because you're a trustee.
Well, because there will usually be a trust relationship manager that will be, administering the trust account.
Yes.
So normally it will be kept in the hands of the trust administrator. So, digital password is not like a tangible item where we can safe custodize it, in a locker or somewhere else.
Yes.
So normally it will be kept probably confidential, just limiting to the trust administrator as well as perhaps the team leader or either the head of the fiduciary department.
I see. So and also regularly you will check in with the client. Have you changed your password? Can you please give us the latest one? Okay, great. All right then. Now we go back to the triangle structure again. Now, I think this is probably asked by the same audience. Now, okay. My question is not on tax exemption, but only setting up structure. Would that make a difference?
Well, yes. Okay, sorry. What I mean by yes is you consult with MAS at the very first juncture
So
to
you
get
don't
the
care
exemption.
about the exemption. You
Even to
consult
get
on
the exemption,
structure.
yes, you need to consult it because
Yes.
you need to apply for the exemption,
Yes.
right? So, if you have the good structure, it's fine. If you get the triangle structure or the two structure, as our audience member has said, the two company structure,
Yes.
you still need to consult with MAS
Yes.
because they have to give you the exemption. It's either going to be on a case by case basis or under the model way of looking at SFO.
Yes.
So
yes.
at all times, yes, there's one part where you talk about doing the taxation point of view, but prior to that, doing the setting up, you need to ask MAS for the exemption. You need to liaise with them for that. So this applies in the sense that when you're doing your structuring, MAS you need to submit to MAS for an application for exemption.
As long as you want to set up a single family office. I mean, if you want to set up just a simple corporate structure, your individual shareholder owning two companies, and you don't want to involve MAS or you don't want to set up an SFO, then you don't even need to involve
Yes,
MAS,
correct.
right?
Because the only reason why MAS comes into play is because you're asking for the exemption.
Asking for the SFO
Yes.
exemption. Okay. All right. Another question. For new products like crypto and assets in metaverse, NFTs, etc., could you share some insights on the future of estates and trusts? Now, I'm not too sure whether we can answer this in greater detail because I think this is a very relevant question for panel 2. But could you share something on the future of estates and trusts? Now, this one, maybe I check with Nandu. So how do you enforce a trust if your assets are in the metaverse?
Okay, so same thing is a jurisdiction question as well.
Yes.
Have you started your claim in a jurisdiction who recognize that these products form part of a property which can be identified, and therefore you can have a trust over these properties? So like I said, so far Singapore has been receptive to these new digital assets.
Yes.
We definitely have seen cases where the court recognized that cryptocurrency is an asset.
Yes.
And I've also read up on cases in New Zealand where
Yes.
New Zealand courts have said that yes, cryptocurrencies are capable of having a trust over them.
Right.
And for this, like I said, it really depends on the jurisdiction. Where you have the popular jurisdiction like Jersey and all that, they want to keep up with the trend. They want to go with where their clients are investing, right? So if they are into these digital assets, they do want to be able to service them. So they would, we have seen the law encompassing these assets under your trust laws. But there are jurisdictions like China, they are completely against cryptocurrencies.
Yes.
In which case, you cannot ask the Chinese courts to enforce, your trust over cryptocurrency, for example.
Yes.
And even in India, I think they are still discussing whether to accept the digital assets.
Yes.
But what we have seen is that they are taxing income earned through cryptocurrency, for
Yes.
example. So it's definitely a question of the jurisdiction in which you have your trust and your assets as well. So in where the jurisdiction is receptive to changes, definitely we have seen the law encompassing the digital assets. But where people are more resistant to change, or they are afraid that these digital assets they cannot be regulated, they have not found a way to properly regulate them, they do tend to be more fearful of allowing the current laws to apply to these assets. Yes.
Interesting. Cindy, what about trustees? I mean, are you seeing a lot of digital assets nowadays? And based on experience, do trustees, are they keen to take on digital assets? Because hearing from Nandu, sometimes it's quite difficult to enforce.
Thanks, Kaylee.
Yeah.
So indeed, of recent times, we have been, having inquiries from clients asking us, can trustee hold on to digital assets? So I believe this will be the trend in future, coming up soon. And in time to come, most of the trustees would have to open up this space as well.
Yes.
And right now, Vistra, I would say that we are also looking into holding digital assets, and we are really open to it. All right.
So what are the requirements? I mean, if you want to onboard a client with digital assets, NFTs and all that, how would you assess the client, or how would you assess the risk of the assets and all that? Yeah.
So certainly it will be on a high risk structure. So
Alright.
basically, to take on these digital assets, the client would have to open a digital platform, right?
Right.
So right now, of course, we have Singapore as a first mover DBS.
Yes.
They are able to hold these digital assets. So, but the key to it is we are not able to distribute digital assets to beneficiaries. Right? They have to be liquidated first before we are able to distribute them in cash to the beneficiaries.
I see.
Yes.
So you hold on to the digital assets. Then what do you do if you cannot do a distribution?
They will liquidate it.
You have
We'll
to liquidate
it. Yeah.
So that means what because I'm not too sure whether the digital assets because I'm not in this space, but I don't know whether they pay annual dividends or monthly dividends and all that, like bank deposits and all that. So I suppose when the value increase later on, and then maybe you may have sell it, and then you just do your distributions like that. But what if the value drops? Cryptocurrencies, bitcoins, they've crashed before. So what happens? You continue to hold it and write it down.
If I may help,
Yes,
Cindy,
please.
on this.
Yeah, okay.
So this goes to the question of the standards which is expected of the trustee
Yes.
when they're holding on to digital assets.
Yes.
So when you have your normal investments, right,
Yes.
the traditional ones,
Yes.
there are certain duties which the trustee owes to the beneficiaries.
Right.
And when you have digital assets which are inherently volatile, and are they required to then have the same standard? Are they supposed to speculate whether the price is going to increase or whether it's going to fall, or all these would depend on the kind of risk that the trustee is willing to take. So in your trust deeds, when you draft the powers and the discretion that they have, this will also form part of it. Because when you have something that is so volatile that no one can really predict whether it's going to go up or down,
Yeah.
from the trustees' point of view, they would be afraid to commit to saying that yes, I will take on the responsibility to ensure that it's always going to I'm going to exercise my discretion to make sure that I will liquidate for you. I will make sure that it doesn't go into a loss. So in that sense, these are things that definitely the trustee will need to take into account. And like you said, they are definitely high risk assets. So it really depends on how you have drafted and what kind of powers that the trustee has and what kind of risk that they are taking.
Yeah, I suppose for a discretionary trust, the trustees will have the discretion to sell. So I suppose you have to monitor the so-called the market, and then when it is come crashing down, you have to quickly cut your losses probably or something like that.
Indeed. So we'll always anchor towards a reserve powers trust,
Right.
so that the reservation of the investment power is always back onto the settlor.
Yes.
Yeah. I think more importantly, should a client really be looking into holding digital assets under their trust structures, it will be important to loop in their friendly counsels, legal counsels, all right, to really look into how to tailor the trustee to fit this kind of class of assets.
Okay. Now, organizers have told us that we are now going into the 5 minutes break. So I think there are no more questions, or if any one of you have any questions, please feel free to write to us and we will try our best to answer your questions. And so I would now close the session. I'd like to thank all of you for attending our panel discussion. I will thank my panel speakers for their very lively discussions. And we hope to see you all again very soon. Thank you.
Thank you so much, Katie, Saravana, Nandu, and Cindy, for sharing on modern wealth structures.